From loss narrowing to 50,000 monthly deliveries, Neo maps out fourth quarter profit path. Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. So despite Neo still reporting a net loss in Q2, and we see the whales jumping in and buying in a massive amount, William Lee emphasized that the company is committed to achieving profitability and hitting the target of 50,000 monthly deliveries by Q4. You heard that right. With a current focus on enhancing cost control efficiency and optimizing its product mix. This is why I've always told you guys, when you look at the stock price and it's dropping, you need to thank God and keep buying. Whilst the sheep run, the whales are buying, and we should do the same. Neo in the third quarter is in a stage of a comprehensive rebound in the third quarter, which we're in. A comprehensive rebound. On one hand, the delivery volume of the Onvo L90 has exceeded 10,000 units, propelling Neo to begin its monthly delivery of over 30,000 vehicles and achieve a new delivery record. Yes, you heard that right. In its 11-year history. On the other hand, although its new pricing system has sparked debates, like with the albino that needs vitamin D, it will undoubtedly provide strong momentum for sales in the coming months. This naturally leads back to the fundamental responsibility that the CEO William Lee mentioned in a face-to-face discussion last week. Can Neo become profitable in Q4, and how? Last night, Neo's Q2 earnings call concluded. Last quarter, William Lee stated that Neo aimed to achieve a monthly delivery volume of 50,000 units in Q4. In several internal speeches leaked this year, he also emphasized that profitability in Q4 is a must. In Q2, Neo reported a net loss of 699.27 million, a 26% decrease quarter on quarter. And we know that will decrease significantly in the third quarter because we're in the harvesting stage, because the research and development that went into this, that created the in-house tech, is now going to be sold. Coupled with a 71.2% Q-on-Q surge in delivery volume and the blockbuster new models launch in Q3, Neo is approaching an inflection point and accumulating growth momentum. However, beyond the numbers we have already witnessed, with other factors give William Lee and Neo confidence. How will Neo achieve its profitability target in Q4? Let's take a look at William Lee's latest statement. Accelerating towards improvement. First, let's examine where Neo made progress in Q2 and where it still needs to strengthen delivery and revenue. Neo sold 72,056 new vehicles in Q2, representing a 25.6% year-on-year increase and a remarkable 72.1% quarter-on-quarter growth, whilst Tesla continued to crumble year over year. An obvious counter-cyclical surge, however, affected by the average prices of models like the Onvo L60 and Firefly, the year-on-year growth rate of its Q2 revenue lagged behind its quarter-on-quarter performance. Total revenue reached 2.728 billion, up 9% year-on-year and 57.9% quarter-on-quarter. The quarter-on-quarter revenue growth was slightly lower than that of deliveries. Automotive revenue stood at 2.305 billion, rising 2.9% year over year and 62.3% quarter over quarter. Profitability metrics. This revenue structure was reflected in its gross margin, with an automotive profit margin of 10.3%, still lower than the 12.2% recorded in the same period of 2024, because we were still doing heavy research and development. However, positive signs emerge in net losses. Yes, Neo's Q2 net loss narrowed by 1% year over year and 26% quarter over quarter, indicating significant optimization in its expense ratio. Cost control. According to the earnings report, due to higher delivery volumes and increased costs related to used car sales, yes, you heard that right, used car sales, Neo's 2Q cost of sales was RMB 2.44 billion US dollars, up 8.6% year over year and 53.9% quarter over quarter. Notably, the growth rate of cost was lower than that of revenue. So a lot of people were bringing in their old cars, trading them in, and getting new cars. In turn, Neo is selling these cars to UXIN. Research and development expense optimization expenditure amounted to 429.5 billion, a 6.6 year-over-year decrease and a 5.5% quarter-over-quarter decrease. This was attributed to different development stages of new products and technologies, as well as reduced design and development cost. Combined, these two factors accelerated the narrowing of losses. William Li stressed the earnings report starting from Q2, the effects of our comprehensive cost reduction and efficiency improvement initiatives have begun to show. Excluding organizational optimizational cost, our non-GAAP operating loss improved by more than 30% quarter over quarter. You heard that right. This is why the whales are buying heavily right now. Neo did not provide an aggressive sales forecast for Q3, instead setting a range of 87,000 to 91,000 units. This implies that Neo expects to deliver 34,678 to between 38,678 units in September. The forecast is considered not aggressive because, as William Li noted, orders for the Onvo L60 increased by 30% quarter over quarter in August because of the L90 recognition to that brand. Additionally, last week brought major news. Neo fully adjusted the pricing system of its main brand, with the starting price of the ET5 dropping by $27,143. Unbelievable. William Li revealed during the earnings call that the full supply chain capacity is expected to reach full ramp up in Q4 because F3 factory will be completed. By then, Neo will not only exceed the monthly delivery threshold of 40,000 units, but also be determined to achieve 50,000 monthly deliveries. How you like them apples? Neo 50,000, a bold target for Q4. When William Li announced the goal of striving for 50,000 monthly deliveries by the end of the year during the Q1 earnings call, public opinion remained skeptical. Actually, it wasn't skeptical. The analyst was skeptical. They pretended to not know we can do it. However, with the launch of the Onvo L90 and the ES8 that William Li knew was coming, Neo's confidence and determination have become fully evident. Last night, William Li further detailed this target. Neo will aim for 50,000 monthly deliveries in each month of Q4. Equivalent to a quarterly milestone of 150,000 units. Neo's total deliveries in 2024 were 220,000 units, meaning that Q4 2025 deliveries are expected to account for 70% of last year's full volume. Wrap your heads around that, guys. The Onvo L90 recently achieved a monthly delivery of 10,575 units, ranking third among new energy vehicles, startups for full month deliveries, and being the only pure electric SUV in the top tier. Delivery ranking of popular NEV startup models in their first full delivery month. William Li stated that in October, the full supply chain capacity for the Onvo L90 will be increased to 15,000 units per next month. The all-new ES8 will also see its capacity ramp up to 15,000 units per month. This means that the monthly delivery target for these two large three-row SUVs will each be 15,000 units, totaling 30,000 units, equivalent to Neo's total deliveries in August. However, these two models alone are not sufficient to achieve Neo 50,000 target. Last week, Both William Li and Shenfei revealed that the popularity of the Onvo L90 had also driven sales of the Onvo L60. Tonight, William Li further emphasized that orders for the Onvo L60 reached an all-time high in August. And currently, though the Onvo L60 production capacity is temporarily being prioritized for the Onvo L90, this balance between ramp-up, speed, and capacity is a key reason why William Li set the overall supply chain target for October rather than September. William Li expects that the battery capacity of the Onvo series will be significantly alleviated by October, with the CATL jumping in now. Over the weekend, the 85 kilowatt batteries for Onvo supplied by CATL officially entered production. Boom! With the Onvo L60 included, William Li believed that the Onvo brand supply chain capacity will reach 25,000 units per month in Q4, officially putting the Onvo L60 target of exceeding 10,000 monthly deliveries on the agenda, which will be a major test for the model after its relaunch. For the Firefly, the latest target announced tonight is to achieve a peak monthly capacity of 6,000 units, which we already outselling the competition in that segment. Excuse me, guys, this is going to devastate it. Adding the all-new ES8, 10,000 units, and the NT2 platform, 15,000 units, NIO's total peak supply chain capacity in Q4 will reach 56,000 units per month, slightly exceeding the delivery target. This indicates that NIO is streamlining its production chain to ensure the foundation of its delivery target remains solid. Against the backdrop of the NIO 50,000 goal, the Onvo L80 has been put on hold, and we all know why, because we need the ramp up for the Onvo L90 and L60 has our factory running round the clock. Looking ahead, NIO's main brand has confirmed 2 new models for next year. The 3-row flagship ES9, imagine what that's going to do, guys, and the large 5-seat ES7, both of which will begin deliveries in 2025. Yes, that's under the main NIO brand, a premium EV. Thus, NIO will continue to launch 3 distinct mid to large pure electric SUVs next year, further targeting the popular segments in the Chinese market. So, as the BlackBerry of EVs crumble, which is Tesla, the new Apple of EVs is here. Updates on existing production lines. Finally, regarding the 5566 series and the Firefly, Qin Li Hong clearly stated last week that no new models under the 5566 series will be launched by 2026. Tonight, William Li further emphasized the 5566 series has been upgraded to the latest CEDAR intelligent platform, so its product strength is already sufficient. And there is no rush for a facelift. Yes, the brain, basically, these are computers on wheels, so the brain has been upgraded for the NIO World model that's coming to devastate and dominate in the near future. The cars will drive from the factory straight to the customer house. How you like them apples? NIO has been approved for L4 testing in China. The Firefly brand will not release a second model next year, though William Li left a small window. Minor product updates such as newly launched Champion Commemorative Edition will still be available. With delivery and capacity targets reaching new heights, is NIO's profitability target guaranteed? First, let's look at the overall goal. NIO automotive gross margin in Q2 was 10.3%. So what level of automotive gross margin does it aim to achieve in Q4 to translate into overall profitability? The figure announced tonight is 16 to 17%. NIO's target for overall automotive gross margin in Q4. NIO in the third quarter is in a stage of a comprehensive rebound. Product mix optimization in Q2. The new 5566 series accounted for only 20% of deliveries, not fully transitioned, which partially dragged down the gross margin going forward. The Q4 gross margin target for the Onvo L90 and ES8 is 20% brand level gross margin targets. William Li believes that NIO's overall automotive gross margin should eventually reach 20%, broken down as follows. NIO's main brand achieved 20% and strive for 25%. Onvo main brand 15% and aim for higher. Firefly brand 10%. Regarding whether the pricing of the Onvo L90 and ES8 is a loss-leading strategy, William Lee emphasized that sufficient preparations were made during the product definition phase with the goal of offering an aggressive price point, expensive efficiency a top priority. Beyond improving revenue, efficiency optimizing spending efficiency, has been the focus of NIO's organizational transformation this year. During the Q1 earnings call, William Lee mentioned a Q4 cost target. Since the Q1, he said this. Under GAAP, the ratio of SG&A, selling, general, and administrative expenses to cost and sales will be around 10%. The ratio was 40% in Q1 and dropped by 23.17% in Q2. While still higher than Li Auto's 11.15 and XPeng 14.36 in Q2, the narrowing trend is clear. William Lee noted that Q3 will see higher marketing expenses due to a series of new product launches, including Onvo models. So the 10% target will not be met in Q3. However, driven by a significant increase in sales volumes, the expense ratio will continue to optimize, and the final target is expected to be achieved in Q4. R&D and other major expense item, NIO Q2 R&D investment was $428.57 million, starting from Q3, reducing to $285.71 million. And in the long run, NIO will stabilize its quarterly research and development investment as an average of approximately $357.14 million. In addition, William Lee believes that cost reduction driven by research and development also contribute to accelerating profitability. At the end of the conference call, he gave an example compared with industry solutions of similar performance. The self-developed Shenji chip has reduced the unit procurement cost significantly. I won't go into the specific amount, but it's a substantial reduction, he said. Entering Q3, it is evident that NIO has moved beyond the previous reflection of past setbacks and entered a new growth phase. From the most visible new products such as Onvo series models and marketing to the underlying research and development and expense management, NIO is accelerating on all fronts. In the short term, this acceleration is aimed at achieving profitability in Q4. Ultimately, however, NIO's mission, as William Lee put it, is to survive and be responsible to its 800,000 deliveries, soon to exceed 1 million users. Imagine the revenue that's going to be coming from battery swapping, from Navigate on Pilot Plus, and from so much more. NIO will aim for the quarterly delivery milestone of 150,000 units in Q4. What do you think of William Lee's chances of success? Share your thoughts in the comments, guys. I hope you guys found this video yet again to be informational, inspirational, and motivational. If so, guys, don't forget to hit that thumbs up. It takes a lot of time to do these research and to do these videos. Also, if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.